You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome to the show, Chris.
Hey, thanks for having me, Jim.
An interesting couple of weeks on the equity markets.
It has been a very interesting couple of weeks. We have seen a very sharp rally, that has really just exploded to the upside. It doesn't matter which index you look at, the Dow, the S&P 500, the NASDAQ, those three major indexes have exploded to the upside. And, we've seen China reducing their rates. We've seen Europe doing some quantitative easing. I think that has been part of the fuel, kind of the power of this big move. But then on the other side, on the same side of that, we've broken some critical pivot highs that have created some massive short selling. And last Friday on the NASDAQ, we saw almost a 3% gap up in the NASDAQ on Friday morning, which is just, to find that type of gap, we had that in August, but other than that, we haven't seen a gap like that really since going back to 2008. And there's some real instability in this market. And when you start to get these gaps, we have, they're seen as exhaustion gaps. A lot of people see this gap as something of strength, but usually when you get big price gaps, it means the market is becoming very unstable and it's actually exhausted. And, if you look at all the major indexes, the Dow, the SPY, the NASDAQ, they've all rallied right up to some previous highs back in July and August. Everything is trading at key resistance levels. Everything's overextended to the upside. And we're getting very close here, I think, to the markets rolling over and have a very sharp correction that could last a couple of weeks. And while the majority of people right now are really are bullish on the market, if you look at the market, the leading indicators, which is like the Russell 2000, the smaller cap stocks, they haven't gone anywhere. They are underperforming, and today they're down very sharply, down about 1.5%. And when that group of stocks is underperforming, that's usually a warning sign that the big indexes, the Dow, the S&P 500, and the NASDAQ are about to roll over. And with them being at resistance, it makes perfectly good sense. And another key sector is the transportation, which you and I have talked about in the past, the IYT ETF. The transportation usually leads even before the Russell 2000 in many cases, and it is underperforming, down almost 3% today. And both those sectors are just extremely weak. There is no real speculative money moving into this market. It is just, I hate to say it, but it's more or less dumb money piling in, getting long. Shorts are covering their positions. People are just getting greedy and frothy at this market, what I think is going to be a major market top. But we've got all kinds of warning signs that there's going to be a very sharp correction here that could take place in the next week or so.
Chris, you came out with a unique trading system back on September 1st. How is that working out in these markets?
Yeah, so we released our algo trade system back in September, right when that big volatility hit the market. And during high volatility like that, the system, we don't really trade a high volatility market like that because we are trading futures. And really, just as of actually yesterday, the system became active again, trading now that volatility levels are actually back to its norm, to where it was in, May, June, July. So really it's been fairly dormant through September and right through till now, almost the last month and a half. So, we're starting to get back into this. The fact that it's active again means we're back into lower volatility, normal ranges, and we're seeing all this money move back into these large caps. The system that trades just the S&P 500, which are the large cap stocks. And all this is pointing to a major downward shift in the market because we've got a lot of greed moving in, and eventually when this market does roll over, the system should do exceptionally well on the drop. But since with this high volatility, trading futures and extreme volatility, our system really isn't designed to handle that type of volatility simply because of leverage reasons. But very exciting because we're about to have we've had a nice huge run to the upside here in equities, and it looks as though we're about to have another big sell-off that could last several weeks, and it could be a huge opportunity for the system and its users going forward.
Bonds, what's happening there?
Bonds and precious metals have been actually holding up really well. They're kind of acting as the safe haven. And we've seen stocks have this strong move up, but we've also seen bonds and gold hold up very well. It seems like there's a big group of people continuing to rotate into bonds, both long-term and short-term bonds, along with precious metals and miners. And I think a lot of people are waiting for this big kind of turning point in the financial market. And we've talked about this really for, the last year probably, is we've been waiting for the equities market to finally put a top in. And that's when we're going to see bonds and we're going to see precious metals, the scales tip. We're going to see the trends reverse. Stocks sell off. Money starts moving into bonds and precious metals. And with the equities market all the indexes are trading at this critical resistance zone. Looks like we've got exhaustion in the market. It's about to roll over. When the market starts to sell off, we are going to see precious metals and bonds, which are forming bullish patterns right now. We're going to see them finally break out of their little bear markets. We're going to see those explode to the upside while equities sell off.
Are gold miners a good idea now, considering that they've had hard times for so long that all the weak sisters have been weeded out and they've become much more efficient?
Yes and no. Definitely a lot of miners have been kind of, weeded out of the market. They're running very efficiently. Obviously, energy prices are lower, also helping lower costs. We're not out of this bear market in the precious metals yet. They're setting up. If this equities market sells off, we are going to see probably the bottom will have already been put in metals and miners, and we'll probably see them explode to the upside. But at this point, we still have not seen them take leadership and really show the first move that there's real money moving into them. So I like the idea of precious metals and miners, and I'm not a bottom picker. I don't try and jump in and grab the bottom because prices can always go lower. It doesn't matter if gold is at 1,000 or if it's at 500, it can always go lower. So I wait. I don't catch the bottom by any means, but once that upward momentum has started and there's an upward trend in place, it's technically, stable. That's when I get in and I'll ride the elevator to the upside until, it's changed. So right now, I'm still very cautious with miners. I think it could be a bumpy road going forward here, and we're at a really critical time where at any time here, they could explode and just take off, but it has not yet happened. And until it does, you got to be really cautious with loading up in miners at this point.
We'll have more with Chris Vermeulen right after the break.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening on the crude oil market?
Crude oil, last time we spoke a couple weeks ago, crude oil was setting up, had created a little squeeze where it popped out of this bullish little pattern that we talked about, this bull flag formation. It popped and broke to the upside, and then it reversed and sold down on heavy volume. And this had kind of happened back in, we saw this happen back in May and June when we saw a similar type of price action forming. It was somewhat of a bearish sign. Usually when the price pops and reverses right back down on heavy volume, that's a sign that the market was simply just shaking everyone out. People got long, and they, when the price starts to move up, everybody else piles on board to play this breakout trade, expecting oil to rally really strong. And the big guys step right in and they sell off all their contracts. They drive the price down, and we've seen it sell off ever since. And of course, we've been waiting for the energy stocks to give us kind of to tilt its hat and give us the thumbs up to go. Energy stocks were set, ready to explode to the upside, and they just never did. And, usually we'll see energy stocks lead the price of crude oil, and they haven't. And by following this general rule has really saved anyone who got long on crude oil. It would have saved them, a real headache, because we've seen a very sharp drop in crude oil here. In the last couple of weeks, it's gone from over $50 a barrel down to today's low is $2 and almost 50 cents, or $42.50. So we're talking about a $7.50 drop in just a couple of weeks, which is 12-13% loss. So overall, the crude oil, if you were to zoom way out on the monthly chart of crude oil, and you go way back to 2000, 2009. The chart looks really set up here that we could see a real capitulation kind of sell-off going forward here in the next 2 or 3 months, where we could see the test of the lows down in the high 30s and potentially some capitulation spike sell-off right down to that around $35 to $32 per barrel level, and that will be a complete washout in crude, and that should really flush the markets, and then I think we'll see it firm up. So there's a really bearish pattern forming on the crude oil chart.
I've heard if the current prices continue, Saudi Arabia basically will be bankrupt in 5 to 6 years.
It's possible. I never really thought of it that way, but that could happen. If you look at the U.S. dollar index, one of the things that could play a big part in this is the U.S. dollar index is setting up in this massive bullish pattern, and if it can break out of this pattern to the upside and rally, we could see about a 15 to 20% rally, more or less, a 14 to 16 cent move to the upside in the U.S. dollar index. And that would put some serious pressure on crude oil. That would put a big washout bottom in gold, in miners, and that would bring us back up to the highs that we saw in the U.S. dollar index back in 2001, 2002. And that could be a major reset in the commodities market, and then we could see things flip. So there's some really critical, the financial market, both for equities and commodities, are at this fragile point where we're going to see things reverse in a big way, or we're going to see the current trends extend to the upside, where we could see U.S. equities rally with the dollar to crazy new highs again, and we could see commodities sell off for another major leg to the downside and really cleanse the market. So it's going to be really interesting. Looking at the monthly charts, it's going to take a few months for all this to confirm, but depending which way these major trends break, if they reverse direction, there's going to be some huge money to be made, and you have to make sure you're not on the wrong side of that. And if you are, you need to close the position and either go to cash or just get on board with the trend and ride it up until that trend is over. So there's going to be a major life-changing event here in the markets, I think, starting likely January, and it's going to cripple people financially if they're not properly positioned.
Does that mean we're looking at a 55-cent Canadian dollar?
Yeah, it pretty much does. We could see, maybe not that low, but we could definitely see something like that. If crude oil completely crashes, the U.S. dollar explodes, man, talk about a real annihilation of the loonie. So it's going to be very, very interesting. And right now, the current trend for crude oil is still down. The U.S. dollar is still very bullish in this multi-year pattern. So, that could happen. It could very much happen.
We were talking about solar energy before we went on air, and I said, doesn't solar energy use a lot of silver, and isn't that a bright point for silver? But you pointed out, at least in Canada, there's a downside to solar.
Yeah, as I mentioned, I was looking to get solar panels potentially on a building that I have, and it's really too bad. Just the currency exchange alone from about a year and a half ago, solar equipment in Canada costs about 30% more than it did about a year and a half ago, and it just makes it not that feasible at this point. And it could get much more unfeasible if the U.S. dollar continues to move up. So it's going to be, I think solar will have a huge benefit when the U.S. dollar actually starts to go down in value. The high dollar is, I think, going to hurt a lot of things. And, of course, there's going to be eventually a big surge in precious metals. When that happens, who knows? But, we're seeing a huge demand for silver, physical silver, but there's really a lack of supply. And, of course, with lots of mines going under and lots of things cutting back in production, a lot of those mines produce silver as just a byproduct. And now that those byproducts aren't coming through, silver is going to spike up in price. And when that happens, that could put a lot more pressure on the solar sector, simply because solar uses a lot of silver in it. It's an industrial metal. And, solar could be having in Canada at least, it could be a real struggle to sell and install and service, solar stuff going forward the next couple of years.
Could you see a Canadian solar manufacturer coming out of this?
Yeah, potentially. Yeah. It would be great to have something in Canada and that's local and everything doesn't have to be imported, but it really depends how things are unfold.
I guess that's one thing that maybe people never thought about. We always think of Canada, cold in the winter and short. But on the other hand, because we're in the north, in the summertime, wouldn't our power production be tremendous and be a great export opportunity for the energy-hungry U.S. on their hot summer days when they use a lot of air conditioning?
Oh, for sure. There's no doubt. Canada has got so much free space. Man, just imagine how much, I don't know how good solar farms are, but I'll tell you, we've got a ton of space and we've got everything we needed to have massive solar and wind power. Things are slowly stepping up, but there's a lot of room for improvement for sure.
Chris, thanks a lot for chatting with us.
Hey, it was a pleasure being on the show, Jim. Thank you.
My guest has been Chris Vermeulen. His website is thegoldanoilguy.com. You're listening to HowStreet.com Radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at Talk Digital Net. Comments or questions for the show can be sent to info@HowStreet.com. I'm Jim Gondon.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.